COP27, that's the United Nations Climate Change Conference taking place in Egypt. Is that right, Katie? Egypt.
That's sounds about right.
Yeah. So we've got some Bloomberg News, Bloomberg Intelligence folks over there. There's a lot going on. I want to check in with Rob Barnett. He's a senior analyst, team lead for European energy research at Bloomberg Intelligence. Rob, thanks so much for joining us. You're based in London here. What are you looking for, if anything, out of COP27? Or is this just going to be a lot of rhetoric coming out about climate change?
I like the way you described it, rhetoric. At the end of the day, this kind of stuff maybe moves the needle, but what I really look at is the bottom-up build-out of policies that we're seeing. So in the U.S., you've got the Inflation Reduction Act. That's the real deal. That's what matters. In Europe, we've got the Repower EU package. These kinds of things matter. Whether we get some kind of grand global kumbaya kind of idea around reducing emissions out in 2050, that's great, but the real stuff that matters is the near-term policy push as opposed to these very long-term emissions goals.
So, Rob, when you think about the near-term policy push, get specific. Give us some names here. Among the clean energy names that I know that you cover, which companies have the most at stake here or the most to gain?
Well, look, I think the clean energy space doesn't need policy as much as the policymakers think they do. The wind and solar industry are generally growing very fast. If you look at SunPower, which reported this morning 67% growth in the top line in 3Q. SolarEdge just yesterday, 59% growth. Enphase at the end of last month, 81% growth. The solar industry is growing incredibly quickly. Now, the wind industry a bit more tepid here in the near term, but we think there's a lot of potential for a company like Vestas, they're the world's largest wind turbine manufacturer, to really pick up the pace and grow a lot more quickly. In fact, we think consensus is way too pessimistic about the growth opportunity that they have in front of them.
All right, so Rob, I know you're ensconced over in London, but we do have some elections here today in the United States. What's the energy industry? What are they hoping for here in this midterm election?
Well, I think we're seeing a real divergence in the U.S. in terms of the Republican and Democratic views on the right way forward. But I would say that it's very unlikely that I think a future Republican Congress would roll back, say, the Inflation Reduction Act. That's there. Those subsidies are likely to stay in place. And you got to keep in mind some of the sunniest and windiest places also happen to be Republican districts. So, I think it's the same kind of thing. Theoretically, do you need the policy to grow quickly? Maybe you actually don't, but you're not going to turn it down. And in the places that have Republican lawmakers, they're certainly going to want to have those dollars flowing into these big kind of solar and wind infrastructure projects.
And Rob, I'm going through the headlines back at COP27. One from this morning, Mark Carney sees a, quote, wall of opportunity in renewable energy assets. Mark Carney, many might know him as the former Bank of England governor, but he's now also the vice chair at Brookfield Asset Management. He's also co-chair of the Glasgow Financial Alliance for Net Zero. So he's involved with the space. But the idea of a wall of opportunity in clean energy, what are the best parts of the wall, to get a little more specific from that comment? Is it wind? Is it solar? Which looks better right now?
Well, there's no doubt that the near-term, fastest-growing segment of the energy space, no matter what way you cut it, is solar. Demand is just growing so quickly there. Wind has a lot of potential. And you bring up Mark Carney. The great thing about COP27 and everything that's being discussed, there's this idea about whether 1.5 degrees is still possible. And I would say, maybe it is, maybe it isn't, and maybe the discussion's really around 2 degrees. But either way, you're talking about trillions of dollars worth of investment that's going to occur over the next few decades in the energy space. And increasingly, that allocation is going to go towards solar for sure, but also wind. And then I'd also be looking at things like hydrogen. We know that wind and solar are intermittent. They're not going to be the only solution. There's going to be other stuff in play. So keep an eye on this space. It's going to grow so quickly.
Hey, Rob, but in the near term here, again, you're in London, so you're closer to what's happening in terms of Russia and Ukraine and the many fallouts from that conflict, notably the energy fallout and the disruption in energy supply. We're moving to a greener energy grid, but boy, you still need the fossil fuel stuff, and we're going to need that for another couple of decades probably. How do you balance that? How are some of these energy policymakers trying to balance that?
It's a great point, and I like to consider myself in the energy realist camp. Just the fact that you need all of this new wind and solar does not preclude the fact that today we are in very precarious supply-demand balance situation for both oil and gas. And so we need more new supply that's ideally in friendly countries. And so I think you're right. And that might be a question for the U.S. Congress to ultimately consider, right? I know the Republicans have a very much more pro-supply perspective on some of the fossil fuels, and some of that could be really useful in the near term. We used to talk about natural gas as a bridge fuel. It's kind of the low-carbon cousin of coal or oil, and right now it's got a bad rap, particularly because of the geopolitics around Russia and Ukraine. But the bottom line is that in the near term, we are going to continue to use a tremendous amount of fossil fuels. And, even if peak demand for those fuels is on the horizon, the decline rates the demand isn't going to roll off so fast that it will exceed the natural decline rate. So you've got to invest in the space even if demand is going down.
All right, Rob, good stuff. As always, Rob Barnett, he's a senior analyst. He's a team lead for our European energy business over there at Bloomberg Intelligence. He's been covering the energy business for a long time. He's got a great sense of the business, the economics of the energy business, as well as the policy. And he has a haircut that I do not approve of, Katie. I mean, ever since I've known the guy, I say, you got to get it cut.
You're pretty